going. There we go. Good morning, everybody, and welcome to the Morning Volatility Report. As I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to Wednesday, yet another Fed testimony day. But before we do that, hey, Frank, Options Beginner Boot Camp. Is up and running February 24th. It is basics. Okay, so just looking at beginning trades or beginning options, a lot of basic theory, dividends, just an intro course. And we think you're going to like it as an intro course. Even if you've been around for a while, you might learn something new. And with that, let's get to the market. So let's see, economic calendar. Basically, you know, Yellen does her prepared speech, then she's going to talk. And as it says right now, she's like, well, you know, we are going to, and this is what's kind of getting troublesome with our current market. We're going to raise rates still as long as there's really no global turmoil, whatever that means. As of right now, you've got a little bit of response from vol. You've got a little bit of response from volatility futures, right? If you look at like UVXY or VXX just as a simple one. We have, you know, basically what we're looking at is she thinks the U.S. economy is doing okay, and as long as the rest of the world doesn't implode, she's going to raise rates. So it's a little dovish, meaning there's some room maybe, but overall, it sounds like you're not going to get a lot of help from the Fed, but the U.S. isn't maybe as bad as the stock market says. So most of the things that are driving our market have been uncertainty about oil prices, problems in, you know, Japan. Whatever they're trying to do is not working. China, slower growth in Europe, all that kind of stuff is still out there. So that really isn't changed much. The fact that the Fed would respond to it maybe makes people a little happier. So what I would look at is a couple of things that are a little troublesome, right? Treasuries are still trading at a near-term high, right? They're actually making new highs into this. I mean, you're looking at a 2-year chart. I don't know if it's going to hold up. Okay. But you know, it touched a near-term high. It's made a massive move here in literally, you know, in 2 weeks. So whatever's causing the turmoil, I'd like to start to see this start to. I would like to start to see this slow down. Actually, we have something in our strategy letter that I got to put out. We got to dump some call spreads from a trade we have. The next thing looking at is I want to look at VIX. Okay, it looked like VVIX was actually catching a little bit of a bid today, and all of a sudden that's turned around. So I think the market's kind of hearing nice things, and we'll see. Again, it's only 9:55. We've seen the market turn around I don't know how many times after the first hour, but at least for right now, the bid for vol is starting to come in. Okay. The bid for treasuries, they're pretty high earlier, starting to come in just a little bit. And we'll see what happens after, you know, Yellen says whatever she's going to say, because we are dependent on that type of data now. It seems all the short-term stuff is totally driven by that, and nothing has changed on that front. So the next thing is stocks like Facebook, Google are looking, you know, pretty good all of a sudden. There seems to be a little bid for them. The next thing is Deutsche Bank also says they're going to buy back some bonds. There was some troublesome there with there was some worry there about it. It's up a bit. So it looks like they're not, there was some, you know, it's a financial, it's a like a too big to fail type of institution. Doesn't mean that equity holders can't get wiped out, but there was definitely some blood in the water there, just literally from the middle of January. And we'll see how bad. So all these things on the periphery are still relatively worrisome. That's what the market's been trading on short term. And at least from the Fed's point of view, it doesn't look like anything has changed on that score. The only thing they're saying is if whatever everybody's worried about actually comes to pass, then maybe we'll slow down on our rate rise. And at this point, I think the stocks need a couple days to hold rallies before we get a really good markdown in volatility. It certainly could happen because mostly all we've seen is we've heard news and rumors, but nothing really of consequence yet. And I think that's where we are. All right. And with that, I will see everybody in our chat room today. Bye-bye.